This is our Forex blog for October 7th, 2013. This will be a quick one because of how late it is. Basically, in a nutshell, our currency indexes are the easiest way to trade because it lets you see visually what each individual currency is doing. Here's the dollar. You can see the hourly moving average in gray, the 15-minute moving average in green. You can see major areas of support and resistance like the point of control for the previous day. That's the most actively traded price from Friday. This is last week's most actively traded price in the euro, major support in the yen. So you can also see the daily, weekly, monthly trends up. So, and you can see earlier today the trends up, it broke the hourly, came down, double bottom, that major area of support. It's very likely to go up here at 11:30. So you want to find basically a weak currency at 11:30 to trade it against. It's that simple. All right. So you can see the dollar was weak at the time. The euro was weak at the time. And I like the euro better than the dollar because the dollar has fallen a lot. It's likely, it's at a support area. It's likely to get some kind of a bounce here. This one had already fallen and had gone up at the exact same time that the yen is finding support and it's likely to go up. This one's likely to go down. So we bring up the euro yen and we look to sell it at that time. It's that simple, 11:30. We're looking for sells in the euro yen. It's very likely to go down, probably 80%. And as you can see on this chart, 11:30 comes, got a nice little trend line break right there. You put your stop above the high, and of course it falls about 15 pips in the next hour and a half. It gets a little bit of a pullback, and then it falls, for many hours to come. But basically, with that perfect timing entry, you had up to 50 plus pips of profit. Whether you got into that one trade and made 10 or 15 pips, and then sold this little wedge breakdown here, which obviously was a much better trade, later in the day. If you scroll forward into the day, when the market broke down at 1500, the euro really never fell like a cliff, but the yen, which was, very strong, daily, weekly, monthly trend, which is very strong, it broke out of a nice wedge pattern at that time. So basically, you wanted to be buying, selling all the yen pairs because the yen's always on the bottom. The dollar was weak all day, so it was likely to go down. The pound was pretty strong, so I would have avoided that one. Let's take a look at the Swiss and some of the other pairs. At that time, the Swiss was pretty weak, and the CAD was too. So basically, you could bring up the CAD yen and sell it. Dollar yen, 1500. You can see this one fell nice 30 pips there. The Swiss yen, very likely to fall at 1500. It does, 30 or 40 pips. Dollar yen also, nice smooth 10, 20, 30 pip move. And that's it basically. You want to buy versus the weak and sell the weak currencies versus the strong. And one way to improve your odds even more is to bring up our range charts. And when you see, let's say, the dollar's strong the euro's weak and the dollar strong, you would take the sell signals. If it's the opposite way, if the euro's strong and the dollar's weak, you would take the buy signals. And you can see our FX signals do a very good job of finding reversals. You basically go in here, you stop above the high. This one went a little bit your way, came down again. You might lose 4 pips on that one. The second one, you move your stop to break even. Maybe you made 2 pips on that one. You shorted here. You made a decent amount of money on that one. This one here probably lost 5 pips. This one here you made 3 pips. This one here you have a very big win and a nice win. The market was relatively choppy today and didn't really have any kind of continuation moves. But you can see for those who don't know how to trade, just taking the buy and sell signals can really improve your trading. Just wait for one of these signals, and especially if you are looking or focusing on only buying a currency or only selling a currency, even if you're just focusing on selling it, you have small profit, decent profit, okay profit. Or if you're focusing on buying it, small loss, 3 or 4 pip win, 30 plus pip win. So that's it for today because it's late. But I spend about 3 to 5 hours every day trying to improve our signals. There's over about 85 patterns, very rare patterns, support resistance, Fibonacci, hourly moving average swing breakouts, higher highs, higher lows, lower highs for sells. We analyze the swings. And we use statistical tools that tell us when the market moves too far, it's very likely to reverse. For example, our containment bands. This low buy down here, which was the biggest win of the day, was made up of our statistical containment bands. And I like using the digital signal processing one, the 1.5 and the 2.0 band. And what I found was that when markets previous swing is way below the lower 2.0 band, the next time down it usually reverses right around the 1.5 band, and that's what this signal here is. And it only got into that trade when the statistical weakness started to lessen. You know, if it had lessened on this bar right here, it would have bought here, but it didn't. The market took, you know, a little bit more time to lose its weakness and start getting strong, and you got into this trade at the absolute perfect time. Notice, you know, how our tools do a very good job of picking the highs and the absolute lows, you know. So whether you're a short-term trader or a long-term trader, if you want to be buying the dollar or the euro dollar at the lows, and it's at the lower containment band, you get a buy signal. Doesn't get any better than that. If you're looking for this as a longer-term trade, you're in at 35.50. You're already up 25 pips. You could, at this point, already move your stop to break even. And if that trend continues to go up over the next day or two, you're risking literally 10 pips with a good chance of making, you know, 80 to 200 plus pips. And so you can use our tools for both swing trading, longer term trading, and also intraday scalping.